get some Wall Street Beats hats. We should have gotten some Wall Street Beats hats.
You guys are lying.
Then you wouldn't wear your Einstein hat, dude.
Yeah, there's Steve. Let's go.
All right, everybody. Sorry we're late. Welcome to Wall Street Beats. I am joined by our healthcare and biotech pro, David Maris, and our macro pro, Benjamin Bry. And we had some scheduling conflicts this morning. We worked it out. We promise it'll be worth the wait. We've got a banger of a show. We were talking pre-show about some stuff, and I'm just going to leave it at that. Maris was at a very colorful conference last week that he wants to share you about. And Ben has, as you know, been very vocal on what he's seeing around this SpaceX IPO. I guess the Iranians didn't get the memo that this is supposed to be happening this week, and not to fuck it up. So we're back to ceasefire and trade and ceasefire and what other talks with Iran again to get this IPO off the ground before everything goes to hell in a handbasket. Anyway, let's go, Maris. Tell us about where you were last week.
All right, so this is the craziest stories I have. So I was at like the Powers of the Universe conference. It's called the All In conference, and it's all tech mostly men, VCs, tech people, founders, and everyone's talking AI. So a lot of the presentations were about AI, a lot about SpaceX. So I'm just going to give you my perspective on it. And I would say, walking away, I feel very confident that I could become easily top 5% AI guru if I just moved out to California. Okay, so let me walk through. First, there's a guy from Kotu. I say a guy. I think he's the son.
Don't tell everybody the secret.
Yeah,
son or brother.
I think it's the son. It might be the brother. I don't know.
Okay. Family member for sure.
But he runs it now. And first, so he comes on, and this is available on the All In podcast. They're the ones who run it. His presentation, and he comes out and says, "Look, this has been a big sacrifice to do this presentation." He owns SpaceX. He owns all sorts of the private companies, Anthropic and the rest. But it took him 2 weeks to do this presentation of dedicated time. And I'm sitting there thinking, okay, well, you're not doing this for charity. Come on, this is oh, woe is me. 2 weeks of your time to do a presentation, but. So he gives this presentation. You have to watch it online. It's essentially says SpaceX valuation. They've been looking at different ways to value it. And one way is that they've seen is the number of launches, satellite launches over time has corresponded to an increase in value. And I said pre-show, it's sort of like saying, I think I've figured out how summer is created. Summer is created because if butterflies create summer, because I see more butterflies during the summer, and that's what happens. It's okay. So in other words,
I know how spring is created. Isn't like a warthog comes out of the ground or something?
Yeah, groundhogs create spring, and it's like you can't. It's not causal. And so the idea that all of a sudden people are valuing SpaceX because they launch more satellites I think is ridiculous. But he then says, okay, if we divide it, we see it's a very linear relation or very equal relationship that over time, its per launch is equal to the number of that increase in value. But then he puts up this chart, and then the last bubble of valuation is like 3x what it was before. I might be getting the numbers wrong. Don't hold me to it. Look at the presentation yourself. It's online.
Last valuation being the IPO valuation.
The IPO valuation blows that relationship out of bounds. And so I thought he would come out and say, well, it's overvalued. But he goes, no, we believe that the markets are rational. And what's happening here is that the market now believes in network effects, that they now understand that his TAM for SpaceX is really all telecommunications. I'm like, okay, well, that is a theory. It's kind of ridiculous. But you have to see that presentation. So each person came out more bullish than the next about this. Bill Ackman gave a talk, but we'll leave it at that for now. My dinner table involved the CEO of Meta, the two senators from Pennsylvania, Fetterman and McCormick, their spouses, one of whom is the president of Meta, one of their children, Bill Ackman, Nikesh from Palo Alto Networks, a family member of mine who's big in the tech area, and me. If I told you
Were you the only one in the room that didn't own SpaceX shares?
Yeah, I mean, by the way, I'm poor. In this entire conference, I'm clearly the poorest.
Right,
so, and I did all right. So I don't know. But a lot of tech pros. But they're talking about a lot of different things. So first, one of the things that my brother said in his presentation was, if you're Google, why wouldn't you just cut the price of tokens by 80%? And just come out, because you have the compute power,
right.
Just every enterprise would use Gemini. The models aren't that different. And what would happen is Anthropic doesn't have a business. OpenAI doesn't have a business at that point. Google generates $100 billion plus of free cash flow. They can do that for a while. So keep that in mind when you think of the risks to what this business is going to be. The other is that they talked a lot about how similar the models are. And that's another thing, and how quickly things are changing and people leapfrogging each other. So when you think about this, how many models in the future, like I use 3 models right now just to kind of play one against it. How long will I pay for that? Enterprises will never do that. So the reason
enterprises are already starting to raise their hand calling uncle, like this is getting out of hand with people using this shit.
Let me interlude there, because that's one of the things I talked about all week last week. And, I'm involved with an AI company called Second Brain. And through that process, I've got, went through the fire hose of grad school learning of to get up to speed. Well, there's a company called Ramp, and there's a company called Open Router, and there's a few others that they're showing you the cost of frontier models are up 3 times since the beginning of the year. The cost of GPT-4 is down like 2 orders of magnitude. Okay. And so, yeah, is it worse than the frontier model? Yes. But it was pretty good at the beginning of the year. Right. And so I think what you're going to see is you're going to start seeing more optimization models. And I built one for myself over the weekend or last week where, hey, what's the task? Then route the task to the appropriate model. Right. So just that alone can save 10 to 20% just doing that. Right. Then you have the Chinese models, which are open source. And as we all know, China's kind of good at dumping cheap commodities on the world, right? It's kind of what they do. T-shirts, toys, now cars, and solar, steel. Why wouldn't they dump cheap AI on the market? So I think that the combination of the companies focus on ROI, the ability to route differently, and the fact that David's right, like the frontier model, like Claude's model is better, but you only need it for certain things. Really, it's wildly more expensive for an everyday thing that you could just use Haiku or Sonnet. But the one thing I'd say, David, is they make more money on the lower cost models. Okay, so like the inference for the lower cost models is higher margin. They're using the better models as a hook to get you in, and they lose money on those. So that, anyways, keep going.
Yeah. Well, I would say the one thing that I came away with is that the uses for AI are probably much larger than I thought. So that will be much more pervasive. This guy Nikesh, I keep saying this guy Nikesh. I shouldn't call him that, because he was super nice at dinner, and I asked him a question about something that was not his. I didn't know his background, was not his.
Wasn't in his wheelhouse.
No, and he was very gracious of not saying, dude, you have no idea who I am. Why would you ask? Why would you ask such a stupid question? Nikesh Aurora. Okay, I'll keep his name. So, super nice guy, very very smart. But he came out during one of his talks and said, we used a model designed for cybersecurity, and they're a cybersecurity company, to look for vulnerabilities in their own code. He said in a couple weeks, it found what would have taken us years to find. He did explain that there were tons of false positives. In other words, code that it said you need to fix that they didn't actually need to fix. So a lot of extra work, but saved him years of time. And they believe they're on the forefront of cybersecurity. So, pretty interesting of how you can use it as a toolkit to check your own stuff. Like it was interesting. My takeaway though is that so my brother comes out and says, hey, by the way, Google might cut this things, and you'll see what happens to the and the besties, as they call each other, are like, do you think that will really happen? He goes, I don't know, maybe. I mean, I that's what I've told Google to do, but whatever. So we'll see if that happens. But the thing that was like really, really striking is that when asked, well, look, you think this is really disaster? He was asked something about the SpaceX IPO, and he said, people are saying, oh, we're doing this for humanity. Like, we're doing it now so that people can participate in the upside of AI and whatever. He said, if you really wanted to do that and help humanity needs money, you should have done this 8 years ago. Help people participate. Right. This is really the 1% that's just going to benefit 1/10.
You're participating in the last mile of it, not the
and it will probably be shareholders, individual retail holders who are going to be bag holders. But when asked about it, like, okay, so would you bet against it? Most people were like, no. And he was like, no. And he said, look, I still think there's a 25-30% chance that it works out. Like, you don't know with technology, you just don't know how it's going to work out. But, with a 70% expectation that it's not going to do well, why would I participate in something like that? So, and it kind of sat with me of like, yeah, that's kind of how I think of it as. It's certainly, you're playing lottery tickets that it could happen. It could be amazing. But the reality is it's unlikely. Now, the deal that you saw with Google doing compute power with SpaceX, that is exactly fitting this idea of let's buy up the compute power. And keep in mind, the deal that OpenAI has with Google, with SpaceX, has I think it's a 90-day, either party can kill it.
It's Anthropic. It's Anthropic.
Yeah, either one can kill it.
Yes.
What do you think happens if SpaceX gets closer to Google? Like that's just keep in mind, like there are now, that's not necessarily a risk to SpaceX, but it is a risk to this whole ecosystem. And so keep all of that in mind. I can't even begin to tell you, like, we talked about why Bill Ackman doesn't tweet about the Pope, how the Pope creates problems in Pennsylvania, because there are 4 million Catholics in Pennsylvania, and if you're a Republican senator and you try to side with Trump some of the time, and then he yells at the Pope, that creates lots of problems. So this was a crazy conference. But I did walk away like with very mixed feelings of, it felt a lot like what now I'm not trying to predict a giant market correction, but when you see the parties of the 1920s of the flappers and people just not, everybody here was having, like, right after the first night was a big poker tournament and stuff. It wasn't like, let's sit down and talk about, what charities we should do.
Let's go hoop it up.
Yeah. So super really smart. It's great to be around smart people though, like that. So I will say.
And people with influence, and people have a little bit of information too. I think that's the one thing. I'm not a huge guy. I don't love going to conferences, but there is always a little scuttlebutt you hear. You pick up a few things, and I always found that to be the actual value of going to those things. Like, somebody told you something that you wouldn't have heard, you wouldn't have read.
The biggest takeaway was there were a bunch of smart people who said, where I'm investing is in the skunk works, in the actual, or not skunk works, in the plumbing of AI. So the people who are doing AI in this application versus the big name brand things that we're hearing about, Anthropic, OpenAI, and the
like. I think that what I would add is that I think that one of the things missing right now is some of the middle layer stuff. And, what we were working on was a memory graph for a company brain that stores all your knowledge, right? So Notion and Obsidian are kind of flat versions of it, but one that graphs it out and combine. So we put all our Wall Street beats, like, for example, all our notes for 2 years, and then it links them, and then it can come up with them. And then the amount of savings you have because it comes back to what I talked about. Or I guess it was in the other thing about the context is the problem, which is why all the memory stocks have gone nuts. These LLM transformers, you double the context window, it quadruples the compute. And by the way, that's also 70% of the power demand. Okay. So figuring out this memory problem of them is a big deal. That's one thing. figuring out the optimization. That ramp company I told you about just raised at 44 billion. Open routers becoming, so I think that kind of stuff is very interesting. I think that the hey, one model will be all, which I think was what people thought it was going to be. I don't think that is as good. I think that we all trained to use Google, right? We were Yahoo guys. Everyone was a Yahoo person, sorry.
AOL.
What?
You started with AOL.
Well, yeah. What I'm trying to say is the platform concept is what we were raised on, basically. Hey, I use Microsoft Excel. I use Google for search. And see, the thing is that's fine because the per seat economics were flat, right? And the per query for Google is flat. Now we have this volume-based pricing. And one of the things I think people probably don't understand well enough is that this is a strong power law. So the guys who are using this at the 0.1% are in a different world of usage than the majority of people. And I'm probably in the 0.1, or I'm probably in the top 1% now, and they're using it way different than I am. And so then the top 1-2% is probably using 70% of the tokens, right? And so it's actually not distributed like that. And here's the thing is that like most people just are used to using Google and they're thinking like, oh, I just use Claude because I'm on Claude. But like the reality is that I have 8 models that I use, like, and I use all of them. And different things are different. Like Google's really, really good for video and images. And Notebook LM is unbelievable to put structured data in and create a presentation or a video or outputs that are digestible. So like, I think it's going to fragment. And if you're an advanced user, you're going to know that. So it's going to be different. And I think that people have to kind of get their arms around that. But with you, David, like the stuff I can do now as pretty much an idea guy my whole life who doesn't really like creating output. Like the output layer has been collapsed. And I think checking your own work, hey, what did I do wrong? Or you saw that Opus 4.8 just came out and solved some math problems that hadn't been solved ever. And that's because it's just iterating in a recursive manner, like deductive logic. So I don't think they're really generative. Like I don't think they have creativity, but I think that in figuring out to optimize, they're unbelievable, basically.
Yeah. So do you guys think that Tim Cook made the right call by just sitting on the sidelines?
100%.
100%. In fact, I came up at dinner. Someone turned to the head of Meta, the president of Meta, and said, "Hey, $100 billion. How's the metaverse?" and her response was like, it was a good one. I said, look, if we didn't spend that, we wouldn't be where we are right now in AI and in our understanding of it. And someone else said, well, you would be because you'd look at all these others and say, look, there they are, and you'd have $100 billion. So I think the view is that they did do the right thing. I will tell you I think the last frontier for all of this, and I brought this up at dinner. So right now, if you are talking to an LLM and you said, something about suicide, and it asked you like, "Hey, are you contemplating that?" I go, "Yeah, right. I'm considering suicide." It doesn't know that you're being sarcastic. It can't hear tone. It can't hear anger. It can only put language in context of language. Now, emotion and context of language. Empathy, all of those things are incredibly, incredibly difficult. If you know anyone who's on even barely on the spectrum, you know how challenging that can be on how successful life is and the rest. So there are companies that are working on that. It's incredibly, incredibly complex, the amount of computing power but where do you train that? How do you train all of that, let alone in different dialects, different cultures, the rest? So can't explain how difficult that is, but if, for example, you were a company that had 1 trillion hours of video and audio that's being uploaded every day to YouTube, you might have a slight benefit. If you had all the Instagram stuff, you might have a huge benefit.
Yeah.
And so when you think of network effects, I don't think of satellite launches so much as I think of giant moats. And those are giant moats. And I will say that of the people there, only 1% really understand that part of AI. A lot are very excited for doing this. They're founders. They love that things are going public, but understanding like, hey, what are still the big challenges and the big things ahead of us? And that will be amazing because then you'll have real therapeutic models.
Yeah, and I would add to that is that like I think that is correct. Is that come back to what I just said about the platform? Is like, okay, Claude has mental share. It looks nicer than OpenAI. It's nice, but ultimately, if it's really expensive, that's going to matter to people. But I think that the data part of it is like where the real mode is, right? Or distribution, right? Distribution is important too, right?
Well, that was something else that came up, which is for non-enterprise users. Now, enterprise users are going to be the real big spenders, but for non-enterprise, for retail users, I have Sheets, I have Google Docs, I have my email, my calendar. I want something that just integrates perfectly. Now, will these other things integrate perfectly? Sure, but unless it's all one thing, it's very hard to get people to be like, yeah, I'm convinced you're not stealing my data and ruining me. It's like, oh, okay, you're integrated with everything. If I trust Google, then I trust Google. I don't have to trust some new company.
Well, so that is the one thing I'd say, David, about this idea of a company brain where it's independent of the model. So it's not like, hey, I'm giving Google all my data or I'm giving Anthropic all my data. Maybe you store it locally on something that's then interacts with all of them, and that can be something that's big, because I think you're right. Enterprises are going to be very hesitant about giving all their data. As a user, you should be worried about giving these things your Chase account or your Stripe account or whatever. Like there are errors, and then all of a sudden your bank. So I'm with you there. Client data, like anything with liability, is really where you're at right there. But like the one thing I'd also
add so just so that you know, I saw this building on that idea is Google Chrome just launched. So this was in May, an AI feature, and it's like a 4 gigabyte model called Gemini Nano. It's when you update, you get that built into your Chrome, and it's stored locally. So Google's already thinking of how to make mini AI on your desktop.
Yeah.
So.
Well, it's not just Google. I mean, there's NVIDIA's has that. There's something called Gemma that you can use where you can locally run these models way cheaper, but you then need to have access to the cloud. So you pay the cloud costs. But having said that, these guys are going to try and make a margin over their cloud cost on you. So it probably should be cheaper, if that makes sense, right? Like, so and again, we don't want to get into cloud spending because it's like kind of you fix fee and then you got to use it. And so there's economies of scale to it. But anyway, yeah, I think that in general, like I'm with you, David, on almost all you said, and that it's interesting though, because we saw Google do an $80 billion raise last week, equity raise. And I had said that on my podcast the day before. I was like, we might start seeing Mag 7 raises, and then boom, the next day. And then it came out that Meta might do a raise on Friday. And so one thing I tell you when you said Google makes 100 billion, well, all these guys, I have an aggregate model now, they're out of free cash flow, or there's no free cash flow, right? Their operating cash flow is now less than CapEx, basically. And so you're seeing them go to the debt markets, go to the equity markets. And what's more important is the next leg. So we're doing 750 of CapEx this year. Well, next year it's estimated to be 1.1 trillion. Where's that 400 coming from? You know what I mean? That's where I think like they can go to the markets clearly, like Old Man Winter in Nebraska gave them 10 billion, and the equity market somehow let them do a $40 billion ATM, which, by the way, you guys have been around the street for a while. When did ATMs become acceptable? Like it used to be reserved just for like Greek shipping companies. You know what I mean? Like
not by Google. What the fuck?
But they're everywhere. It's not just Google. They're ubiquitous across the street now.
Yeah.
And by the way, I would argue that if you were starting over on the ATMs, and for people who don't know, these are at the market things where they take a percentage of the trades, and some of those, when you put in a buy order, some of those you'll be getting shares from the company that are newly issued, and they'll get the proceeds. You're not buying it from somebody else who's selling it. Well, I would argue that these bigger companies, that's how it should have started and been more legit, because there's so much volume and you're not really hurt by it. But when you're buying a small cap name and you think, oh wow, this isn't so bad, I can get the shares, and you find out that they've just been selling shares all year long. Yeah, it's there should be, I think, more discovery for individual investors, that when you're buying shares, that they tell you at the time that you're trading, by the way, this is an ATM company. You may be getting these from, because you're like, oh yeah, well, because you can usually wait for those companies. You can usually wait a little while because there's always a steady supply in this, and the price will come down. For Google, they'll be done with that ATM in a short period of time, if not already. So
yeah, well, there's liquidity is massive there, so it's easy to bang. It's easy to bang that out when the liquidity is like that.
Yeah. So back to it, it's just like, okay, you're having a situation where the market has an $80 billion equity raise from Google, 25-ish, let's call it, from Meta. Then now we're going to have 75 to 100 of SpaceX. Then we have probably, I don't know, let's call it 50 to 70, 50-ish from each of OpenAI and Anthropic, and these secondaries, right? SpaceX has a really crazy, able to lock up, no lockup for a lot of the existing holders. So there's a lot of secondary paper that's going to come on the market as well. So one of the things that really,
where's all the money going to come from?
Well, yeah, I mean, I think that people,
and Bitcoin is telling you partly.
Bitcoin's telling you liquidity is not great right now. The narrative is Bitcoin was a power play, and so the guys who were power miners or secured the network have moved into inference and training for AI, and then the people who kind of were crypto type speculator investors, they kind of they like things that go up and to the right, and this is kind of the new hot thing. So they've just kind of lost both of those players, and so you're like, what's the narrative for Bitcoin? I don't think Bitcoin really has a narrative right now, and it looks like a great classic clean head and shoulders chart right now. And that thing breaks 60, who knows where it goes, right?
The narrative for Bitcoin is sell it so I can buy my SpaceX shares at the IPO,
or AI stocks or whatever. Yeah. And so I think that's the thing that I'm kind of on, is that the supply side is one thing that this market, with the exception of post-COVID, where we did all the reorgs and we did the recaps and we did all the IPOs and the SPACs. You guys remember the SPACs? That paper growth was actually too much. And that is the thing in the post-GFC world, where we had these titans, these Mag 7s, they're just making a bunch of cash, buying stock. So you had mergers and buying backs, and that was just shrinking the divisor of the of the S&P. So you had a natural lift, and that's one of the reasons why the S&P always goes up. And the other part of that was, as passive share climbed, you had a dynamic where the effective float of the market was declining, right? Guys like us and the people who watch our show to make investment decisions, we're a smaller and smaller piece of the pie. That passive, that they don't buy or sell really, and so you just have less stock that's actually in the market, and so you get much wilder single stock vol, as I'm sure you guys have noticed. I mean, the earnings vol on even big stocks is insane now. I mean, down 10% move, 15% moves. It used to be a big deal to have one of those in a big cap. Now it's just part of the natural feature.
So Ben, I've got like a half a dozen friends at least in this SpaceX IPO, and some of them they put $1 million in a couple of years ago, and it's worth like $100 million now. How do you?
What do you think is going to happen to real estate?
Well, no, but how do you hedge it? I mean, and what I got to imagine, there's a shit ton of stock like that's not going to be locked up, that's going to come to market the second it possibly can. But it does take time for those shares to get into those people's accounts so they can actually trade them, or into the people that are the hedge funds that are managing them so that they can trade them.
That was my brother's point in the Q&A. He said, listen, the real thing isn't how the IPO goes. It's 6 months plus 1 day. Let's see how that is. And either way, right? If it's down, even if it's down by half, most people are still up a tremendous amount.
100%.
They're out.
100%.
If you're a lot of funds who put in, you think Ron Barron's going to stick around down 20%? He's going to be like, look, I just made $4 billion or whatever the number is. So let alone if you're up. So I don't know. I think.
But is there a way to hedge it? Is there any way to hedge this thing? I mean, there's no real comps. There's no like, you're just kind of stuck, huh?
If you're institutional, often a bank will be able to do a single stock swap with you, but it'll be expensive. But I'll give you an example. I have a buddy who used to be a PIMCO in a special situation group, and they had a bunch of Rivian, and then Rivian came, and that was the big deal of the 2021 clean energy cycle, if you guys remember that. And I told him, because, it came out hot, and I said, why don't you guys hedge it out? And he's like, well, swap's like 10, 12%. I was like, so who cares?
Right.
Lock that in, man. Like, and they didn't. And you saw what happened to Rivian, right? And so I got to also give you guys one little personal anecdote of I got 100,000 shares on the Meta IPO in 2012. This has a lot of feeling like that, where Meta came out at almost 30 times revenue. Now this is 100 times revenue, which is absolutely retarded. Sorry, excuse me, it's stupid.
Very insensitive of you.
And yes, no, I apologize. And basically that deal pre-market was $42. They priced it at 38, and I just saw it start going down. I was like, I am out of here. And like dumped it at like 40, 50 or 41, and then closed the day at 38. They didn't let it, they defended it, just like they did that QNT Quantum last Thursday, by the way, which ended up breaking deal the next day. And then Facebook went down to 17.18 over the next month or two. And I actually bought it around there and held it for a while after that. But like, because I love the Facebook business, and I don't love the SpaceX business, but like, I'm just saying that you have a questionable business, which is cool. So I'm a Starlink customer, and I think the reusable rockets is an amazing technology. And I think that, the data centers he has are very valuable. So like, this is a real business. It's just being sold at a space-like multiple, an Elon multiple. And
yeah, I will say everybody at the conference agrees that he can build a data center faster and cheaper than anyone else could even think of. That telecommunications, of having a phone that can bypass all cell phones, would be pretty great. Like a lot of people, if it's reliable. So he and his AWS competitor, his cloud computing, is growing like a weed. So you're right. He does have a business. I don't think anyone is saying it's a fraud, but I go back.
No, it's not a fraud.
I keep getting reminded of, in business school, there was one study where I said, you know what? Throughout my whole career, this has been 100% right. And usually it's like nothing's like that. But if someone's trying to sell you an IPO, that is probably not good, because the institutions will get all the allocation of the best IPOs, and that has been, in other words, it's kind of the winner's curse of, if an individual can get shares of an IPO. And I understand this one they're being allocated to, but the fact that Jamie Dimon and other folks are going on road shows to pitch to high net worth individuals why they should be in something is, I've never heard of something like that before. So if you're wondering how much it costs to get Jamie Dimon to speak at your book club, you kind of know the number now.
Well, and it's funny because I had mentioned this. I had two stories on this roadshow. I had a buddy who was in that brand new nice JP Morgan office in New York, which apparently is amazing. And he said they had a high net worth, like, theatrical production. They had moon rocks and asteroids in there, and people dressed in bomber jackets and in like space helmets, and like, he's like, I've never seen anything like it. It's nuts. And then another guy said Morgan Stanley did something similar in Chicago. And I've done a lot of IPOs in my day. I've never seen anything like this. And like, I was at the Alibaba IPO, and Jack Ma came in. They just jammed us all in some big room, and I think it was the Palace Hotel in New York. Like, that was the biggest IPO ever at the time.
Now you're getting a Cirque du Soleil show.
Yeah, exactly. That should tell you something, that if there's a theatrical entertainment component to it, either society's gotten weird, which maybe it has a little bit.
Probably you should run the other way.
Or yeah, that exactly. And again, it is just comes down to, this stock was basically, hang on, let me see if I can show you this.
Yeah, while you're looking for that, it's just like private credit, right? People are talking about the troubles in private credit. It was 2 years ago that all of a sudden I start getting, hey, we have a unique opportunity before only available to Blackstone. Now we can open it up to you. I'm like,
yeah, you're so
lucky. Check this out. So there it is right there. Like this stock, this is the private market. I noticed in December, it was 42. All right. Has it really gotten that much better where it's like triple since December? And if anything, if you look at the S1, its ARPU's down by 30% to try and grow subs, and they didn't grow subs that fast. And again, I'm one of those guys who's a new sub, but I'm just saying to you is that this is pretty much a jam job in terms of the valuation. That's what my point is basically it's an expensive valuation. It reminds me of Meta a lot, and you could see this thing, have some issues here. And also, final thing, I've done analysis on IPOs, and basically most IPOs, especially big ones, they don't trade well from the first trade. Now you can get the pop, so if you can get out stock sometimes, but they tend to not do well, and it's because of exactly what we just talked about. Steve's buddies, other people, they're in it. That supply is going to come online. You're going to have to get a new shareholder base, and often that supply is too much. And on something this big, historically IPOs you participated because they had a big convexity to it, right? It's like, hey, we get in at 500 million or $1 billion or 2 billion, and then it can rip. Well, this is coming out at 6% of GDP. I mean,
they've already offered it to retail. And they've already offered it to retail.
Yeah, everybody. Here's a question:
anybody's had a look at this thing over the last couple of years?
Exactly.
So Google's invested in SpaceX, and that's part of the reason this deal gets announced is that in a zero-sum game, if SpaceX wins, Google wins because of the investment. I think I read that they have. It's like at the current valuation for SpaceX, it's like $120 billion investment in SpaceX. And so, in other words, if it doesn't do well, Google loses out. But if it's not doing well because of market share, Google might be gaining. But do you think that's priced into Google? Do you think people understand what that is?
I mean, yeah, I think
like
so.
all their bets, they have this side pocket of their Google bets or whatever they call it. And I've always wondered the same thing and never really thought they were very well priced into the stock. Like Waymo. I mean,
I think the Anthropic, so they've put money into Anthropic twice, I believe. And so the one thing I would tell you about this whole circular financing thing, and that's the last thing I'll say, is that there is an aspect to this whole thing that's very Magnetar-esque, very circularfinancing.com-esque, where, NVIDIA funds CoreWeave. CoreWeave buys NVIDIA GPUs. So, CoreWeave's IPO, they couldn't get across the board until NVIDIA comes puts 25% in it. Last year, there was a issue, CoreWeave getting a loan. Its CDS blew out to 900. Well, NVIDIA magically shows up. Kind of like how Magnetar was in there buying the CDO equity tranche, which those CDOs would have never gotten done. And they also had the senior. And then the trick was they bought the CDS that was mispriced with the coupon from the thing. So they looked at it as a loss leader. And you think about it, NVIDIA or Google standpoint or Microsoft, hey, we'll give you this money, but you got to sign cloud. Actually, Microsoft didn't even give them cash. They just gave OpenAI $13 billion of cloud credits. But the other thing was Google, they then recognized the gain on sale. And so their earnings last quarter were $68 billion. 28 billion of them were just gain on sale from Anthropic revaluation. So they're getting this like, hey, you're going to sign a $200 billion cloud business with us and you're going to buy TPUs. And that's what we really care about. But if your equity works, great. You know what I mean? And they're getting they're right now getting their cake and eating it too. We'll see if it continues. But there is a big circular nature to this whole thing that I think people should be very aware of, that the same companies are buying from the same companies. And we've seen how this works before. And this is usually the mechanism that drives bubbles.
All right, let's wrap it up there, boys. We gotta give everybody their day back. We started late. Thanks for following us on Wall Street Beats. Thanks for watching today. Hope everybody enjoyed the show. We'll be back here tomorrow. Follow us on wallstreetbeats.com and have a great day. Thanks, gentlemen.
See you, everybody.